Welcome back to the Nomad Hedge, everybody. In today's video, we will analyze the price action here for the S&P 500. We're looking at the ticker symbol SPY, and basically we're going to go through the intraday chart and take a look at how things are faring out and how much left we basically have from this entire rally. Now, just to recap here, we do believe that the S&P 500 is currently progressing towards this wave 5. Okay, so this wave 5 here represents the minute degree. Okay, so once we have finalized the minute degree, we'll get this correction, maybe 8 to 10% correction, and that will set the stage for a minor degree after that. So looking at the chart here, we can see that wave 1 started right here, and that we had wave 2 there, and that set the stage then for subwaves here to conclude wave 3. And then wave 4. Now we do have this rising wedge here. That's first clue that we are within this wave 5 or progression towards this wave 5. Now we thought earlier that this could have been the conclusion of wave 5. The reason we actually called for buying the lows here is because if we look at the structure, we can see that we have a wave 1 here and then another wave 1, 2, 3, 4, 5. So basically we just completed this cycle here, and the wave 3 and 4 was within this wave here. So we're going to get this last push here towards wave 5. And so when we look at this area right here, we're going to zoom into a 4-hour chart. This is basically how things are looking. Okay, we can see here that we do have a subwave here of wave 1. Okay, potentially. Now, if this in fact is wave 5 minute degree, that means this entire move here is just corrective. And that this move here was just impulsive, meaning it's an A. So if we're breaking above to new all-time high here, that will give us clues that we're in fact looking at an impulse here towards wave 5 minute degree. Now, if we take this extension here and make it a 1.618, we can see that 1.618 should conclude right here. And that normally sets the stage for wave 3. And then we'll have a little bit of a correction, wave 4, and then you will have this last push here towards wave 5 minute degree. Now, sometimes wave 3 can push towards this 100% extension, but normally we're looking at this 1.618 because wave 3 is normally the strongest wave. Okay, so if we zoom back here, I think it's a little bit too early here to look for targets, but we can look at this. We can look at this 100% extension as a potential target at around 700. I think it's a little bit far-fetched, so I'm looking for something along the lines of this. We get a throw over here, and then you get the correction right there. And so that will, once we have this wave 5 conclusion, that will correct this entire move here. Okay, now we're not calling for the lows here, the April lows here, to be broken. We're calling for around 8 to 10% correction. And we're looking at this trend line here for potential support. We also have the 233 EMA on a daily chart. Now, if we move on to a weekly, we can see a little bit clearly here what we could be looking for. Okay, I know this is a little bit far-fetched because we haven't really started the correction yet. And mind you, we're still above the 8 EMA of the weekly chart. So everything's looking bullish still. As soon as we're starting breaking below this 8 EMA and touching that 21 EMA, that's when you can start beginning to be bearish in this market. But let's just say that the market will begin to correct this wave 5 here. So we're looking basically for this prior wave 1 primary to be retested. Okay, and why do we say that? Well, because that would represent around 10%, right? So you get the 10% here, and that will just be a retest here of this former high. I'm looking at this 55 EMA on a weekly chart, so that could also be a test of that moving average. Now, we could be wrong here. We could make the case that wave 1, a minute degree, started right here, and we're looking for a subwave right there. So that's a possibility as well, and we're completely open to that. However, when we look at some of the indicators, we can pull this off, for example, and as you can see here, we do have a negative divergence here from wave 3 towards wave 5. And that's typically what you see when we're starting to conclude wave 5, right? And so that is why we're a little bit cautious here that this, in fact, could be a wave 1, 2 of minor degree. So we're looking at this minute degree to conclude, retest that former resistance, right? That was now resistance, and that's becoming support again. So that's basically how I look at this market. And so to give us clues, if in fact we're going to break out to new all-time highs here, we do have the Dow Jones Industrial Average to give us clues already. And we can see that we did in fact break out to new all-time highs here on the Dow Jones Industrial Average. So that would suggest the market will try to push higher here. And so that 233 EMA on the 4-hour chart is also something very important to notice, because when we typically find buyers within this moving average, you typically see the market push higher. And that is why we have been bullish still in this market, despite people thinking that this could be the end of the rallies. And that is why we did not sell our stocks, because we did in fact predict that the S&P 500 would find a bid here, and that we would push higher, and then at a later stage, that's when we can actually begin to sell. That is why we remain bullish here. We will be looking at this lower high trend line here, so maybe right there at around 650, 680. We can look for a throw over as well, and that's also a possibility. So if we quickly just take a look at the Qs here, we can see that the Qs is beginning to also show signs here that we're breaking out to new all-time highs, and that will give us further confirmation that we're going to likely push higher here. So be mindful, look for catalysts, look for something that could trigger a sell-off in the markets, and that is why you need to be ready. So we have been bullish ever since. I mean, you can take a look at my X account, and we bought the dips in for Nvidia. We bought them very low, as well as the other Mag 7s, and even Bitcoin for that matter. So that is why if you haven't bought this market yet and looking for a pullback, you should just wait here and look for that 8 to 10% correction to happen once this rally finishes off. And that should provide you with a buying opportunity at a later stage. So to keep you guys updated, I will post more. And in the meantime, you can follow me on my social media. It is at Nomad Hedge across the board, but I'm most active on X. So I'll see you guys in the next video, and have a great day.